Welcome to Trader TV, your insight into trading for professional investors. I'm Dan Barnes. Electronic repo trading between dealers and clients has evolved to deliver fundamentally better service for investors. To tell me how banks and investment firms are taking advantage of this are Kat Dawson of MTS and Iain Colquhoun of TD Securities. Kat, Iain, welcome to the show.
Thanks very much, Dan.
Nice to be here, Dan.
Iain, to start with, can you tell me what have been the key drivers for the electronification of repo trading?
The repo market historically has been very anachronistic. It lagged behind most peer products on the trading floor in terms of automation. That's changed fundamentally, I would say, over the past 3 or 4 years, and we've started to see increasing levels of automation. At its very basic level, that might involve just a Bloomberg ticket. The drive to go past that has come very much from the regulatory side. Development of SFTR has been key in this, and really the fact that the electronic record of the trade can include all of the necessary regulatory information, the UTI, the LEI of the firm involved. It provides all the information possible in a very user-friendly format, and as regulations continue to adapt, we have CSDR coming in, that kind of settlement process becomes a great deal more important, and it's not just about saving money or saving time anymore, it's about complying with regulation. The repo market still starts with a conversation. It's very much an over-the-counter product. It'll be a negotiation between two counterparts, but that confirmation stage and that final part of the process, where a list of perhaps very many bonds or several different terms of maturity when it comes to tri-party can be put on screen and priced very precisely now, and that's something that really has taken the market forward.
What we've noticed particularly at MTS has been that historically it was just a few key clients coming to us for help in automating this flow, and actually more recently it's been dealers coming to us where they have the odd client that's still trading purely voice and they are seeming like a bit of an outlier. We've got a very extensive and established network of clients on our Bond Vision trading venue which we're able to connect them with to bring those two counterparties together. What we want to do at MTS is to be able to support and complement the relationships that the sell side have with their clients and to not disintermediate that in any way. We've always had a very strong pan-European presence, and actually in more recent years we've really expanded in terms of pushing more towards UK hedge funds and UK-based asset managers. We've managed to onboard quite a lot of those in the last 2 years. A key change has actually been around the issues that we're trading as well. So we've been very much known and renowned for trading a lot of European repo. In the interdealer repo market, our average daily volumes recently have been around 140 billion. It's absolutely huge. And it's been quite interesting to see client demand in the dealer-to-client space. We've been trading a lot more tri-party repo in either sterling or US dollars. Traditionally, things that people perhaps wouldn't necessarily associate with MTS. So it's been a bit of a new venture for us, but it's been really, really great to see. And we hope to be able to continue in that vein as well.
Iain, when we look at the service level that clients are receiving, how does that reflect the evolution we're seeing in electronic trading of repo?
Relationships are still incredibly important, and what we want to be doing is talking to our clients about the direction of the market, what their plans are for the next 6 months. What we don't want to be talking to them about is settlement fails or what ISIN was it you wanted to transact in there, or what was the end date, the 4th of March or the 3rd of March. I think that development of electronic trading has really added a degree of certainty to the end of the process, which really allows us to concentrate on the real meat of the relationship and really try to add value to our clients. Fails have almost reduced to zero, and as we add in layers of STP, it becomes very hard for the trade to go wrong. In the olden days, perhaps, we would have seen the advent of electronic trading as being the end of a kind of formal bank sales department, but if anything, we're seeing the opposite of that the sales part of the relationship becomes more important. A repo salesperson is no longer an admin person who's hand-holding the operational process. What they're doing is enhancing the relationship properly, as the name of the role would suggest. So that electronic element has really enhanced all parts of the relationship.
That's really good, thank you. So if we think about developing best practices in the electronic trading of repo, what would you say are some of the key points?
Primarily, we were focused on efficiency, and simplicity was key for us in this process. So with our existing interdealer platform, which has over 100 dealers connected, we just thought it made sense to make that connection as easy as possible for dealers by building the functionality for the dealer-to-client platform from the existing interdealer technology. So we've done that for all of our banks, and we're also able to facilitate their trading, whether it's via their own front end or via their specific ISV. It's crucial on the sell side. I think it's also important to mention on the buy side, We have a seamless multi-product platform for all buy-side clients where they can open an RFQ, be it on any rates product, corporate product, or any repo trading as well, all from the same front end. Also, we've added an AX functionality on BondVision Repo, which allows the trader on the sell side to reflect an AX from the interdealer order book that they're currently sending on MTS Repo. And you can show an indicative size, or you can do an indicative rate and a size. But all of the data is controlled and owned by that trader, so he can share as much or as little information as he likes with his client. But effectively, it means that the clients are getting tailor-made, or tiered axes essentially from the trader.
We come from a background where things are incredibly siloed. So we have UK gilt trading, we have corporate bond trading, we have tri-party trading. The electronic markets are a place where everything can come together, and we're looking into increased automation internally now, which will allow us to merge all of the marketplaces into one screen and layer in on top of that the MTS and BrokerTech dealer-to-dealer platforms. As we see these markets develop, I think it's going to be incredibly important to link up the tri-party set that we're trading with client A with the BTPs and spotnets that we perhaps want to buy or fund in the MTS dealer-to-dealer market. I think that's where we're going with this, where the trading of securities takes place in just one place. And having this conduit is going to be very important in that, simply because it's very hard to keep control of all of those different strains of data, through Bloomberg compositions.
So if on the sell side you have a far more streamlined process and a better understanding of what's moving in the interdealer market, and that can be then reflected into the dealer-to-client market, what potentially does that have as an impact on investors?
They simply get a better service and a better way to compare dealer to dealer. A lot of these platforms will offer additional and ancillary data around the asset or the tri-party basket, which allows you to keep track, perhaps make more informed decisions. And I think that that's going to be an increasingly important part of the process on the investor side.
Fantastic, thank you. Kat, can I just ask you, what are the next steps in terms of your evolution of the product?
We want to commit to keeping the platform competitive in terms of pricing. I think that's really important for us as a business. What we've always seen as a common theme has been concern in trading costs from the sell side. But what we've actually heard more recently is that actually we're seeing concerns from the client side about the cost of trading. I think there's perhaps an implied concern that somehow if the dealers are being charged too much, that somehow that's going to have a knock-on effect for them in terms of pricing. So what we've done on BondVision is we've got a very competitive fee schedule, particularly if you're a strong dealer across asset classes, so across rates, credit and repo, then effectively that trading can be free. It's capped at a fixed cost for the year. And we're finding a lot of banks are finding that a really appealing solution. That's something that we're definitely working towards to keep our prices competitive and make things as fair as possible for both the sell and the buy side.
Kat, Iain, thank you both very much.
Thank you so much, Dan.
Thanks for having us.
I'd like to thank Iain and Kat for their insights today, and of course you for watching. To catch up on our other shows or to subscribe to our newsletter, go to tradietv.net.